Shares of Supermicro are trading at $436.88, and they are down over 50% in the past 6 months after recent allegations of accounting manipulation. And zooming out a little bit, we can see the massive impact that this has had over this past year. So barring this news, where can we expect to see the stock price in the next couple of years? Well, for my June 2026 price projection, they're expected to have earnings of $2.5 billion, which makes their earnings per share $42.60, and their current PE is 21.9, and based on the trend, I think that we can expect that to hover around that number for the next year or so. So if we multiply that PE of 21.9 by their projected $42.60 EPS, then that gives us a share price of $932.90, which is a 114% upside. In terms of other analyst projections, it looks like they're bullish as well, with the average one-year analyst price forecast being $615.18, which is about 40% higher than where it trades right now, with a high estimate of $1,300 and a low of $325. For our triangle analysis, going into growth expectations, it has beat 3 of their last 4 earnings calls, having missed their latest one by 23%. And in terms of revenue and net income, the revenue growth and net income have both really been taking off over the past couple years, so it's no wonder we see the stock price reflecting that. This growth does look really, really good, and I'd put their growth expectations at a 5 out of 5 because of this well above average growth, especially when we see the AI industry as a whole continuing to put up massive growth figures lately. Moving on to valuation, with the average S&P 500 IT company PE sitting around 38, it's making Supermicro's valuation of 21.9 look really attractive, and considering SMCI's PE was just at 90 earlier this year, the crash in valuation has shown us just how much room there is to grow going forward. So for this reason, even though the valuation is still on a downward trend, given its full history, I think that it absolutely has the potential to reach a much higher valuation than what it's at currently. So for that reason, I'd rate their valuation at a 4 out of 5. The health metrics, they do not offer a dividend, but they do have some pretty big stock buybacks for 2024, so that's good to see, and we've seen some of those earlier this year. SMCI also has a shareholder equity of $5.5 billion and a total debt of $2.2, which makes their debt to equity 40%, and that's fantastic. And their cash flow is negative right now, which isn't great, but that's because they're investing a ton of money expanding its operations, and that's been critiqued a lot these days. So for these reasons, I would put their health metrics at around a 3 because it's not great, but it's also not the worst given its 40% debt to equity ratio. Overall, though, it doesn't really matter what the scores are for the stock in terms of the triangle analysis because the accusations of accounting manipulation are going to have a lot of short-term impact, whether they're true or not. And even though at this time it's only speculation, accounting manipulation could have a massive impact on the company's growth expectations. They could be overstating growth and their health metrics. They could be, fudging debt numbers as well. We don't know. And so for these reasons, I would not chance it, even if the growth expectations are looking really tempting. So for now, I'm going to rate SMCI a sell because who knows what's going to happen with these accusations. And in the meantime, though, I think it's a great idea just to watch the news very closely on this because if the accusations do turn out to be false, then I think SMCI's low valuation and good growth expectations certainly make it an attractive AI option. Anyways, that's all I have for you today on Supermicro stocks, so please drop a like, let me know which stocks you'd like me to cover next, and I will see you next video.